More shockwaves were created by the abrupt demise of the cryptocurrency exchange FTX. Now that authorities are looking into the company for possible securities violations, analysts are preparing for a further decline in cryptocurrency values. The conflict between Binance and FTX, two cryptocurrency exchanges, has quickly developed and wreaked havoc on the market. In this video we will be breaking down the events from where it began and where it is now. Watch the video till the end to understand the current market crisis and what you need to do during this crucial time. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex and many more. Hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. November 2nd, reports that a business created by SBF possessed a sizable quantity of FTT. The controversy began on November 2nd with news that Alameda Research, a trading company formed by Sam Bankman-Fried, had released a balance sheet that appeared to show the company had a sizable holding of FTX token FTT, the native token of the FTX cryptocurrency exchange. The crypto community was concerned about a big trading firm possessing so much of a single asset, and there were also worries about the connection between FTX and Alameda. Trackers detect a massive FTT migration to Binance on November 5th. Nearly 23 million FTT worth over $584.5 million flowed into Binance on November 5th, according to the Twitter account Whale Alert, which monitors big on-chain cryptocurrency transfers. The amount represented around 17% of the FTT in circulation at the time. Alameda's CEO explains the balance statement on November 6th. In a tweet on November 6th, Alameda CEO Caroline Ellison attempted to calm any anxiety by stating that the leaked balance sheet wasn't representative of the entire situation and that it was only for a subset of our corporate entities, and that other assets worth more than $10 billion aren't reflected there. If you like our videos, please hit the like button and share the videos. If you have not subscribed to the channel yet, please subscribe so that we can bring more videos for you. Due to recent revelations, Binance moves to liquidate its holdings in FTT on November 6th. Changpeng Zhao, CEO of Binance, announced that his exchange would liquidate all of its FTT holdings later that day, citing new findings that have come to light, which are thought to be related to the Alameda balance sheet. Zhao claimed that due to its FTX disposal last year, Binance had around $2.1 billion equal in Binance USD, BUSD, and FTT, although he did not elaborate on Binance's current FTT holdings. The token sales, he continued, will be conducted in a fashion that minimizes market impact, and he anticipated that they would take a few months to complete. He added that the transfer of roughly 23 million FTT on November 5th was a component of Binance's liquidation strategy. Later, Zhao clarified that the action was simply post-exit risk management, and cited the market impact and lessons learned from Terra's Luna Classics (LUNC) demise as the reason for the decision rather than a Twitter spat. November 6th, Alameda's CEO makes an offer to purchase Binance FTT assets. Ellison tweeted Zhao on November 6 shortly after Zhao announced that Binance was liquidating its FTT holding, and that Alameda would gladly purchase it all at $22 per share. November 7, the FTX bank run starts, as the exchange deals with slow withdrawals. Users of FTX started to withdraw their money from the exchange out of worry that it would fail, as a result of the circulating reports and rumors, and commentators urged those who hadn't done so previously to do so. Users started to complain about delayed withdrawals on FTX after Nansen statistics indicated stablecoin outflows on FTX surpassed $451 million over 7 days on November 7th. The exchange responded to the withdrawal complaints by assuring users that everything was functioning as it should. November 7th, SBF declares that assets are fine and urges CZ to cooperate. A competitor is trying to go after us with false reports, Bankman-Fried tweeted shortly after the exchange addressed user concerns. She also noted that FTX is okay. The assets are good. The exchange, according to him, has enough to cover all customer holdings. It doesn't invest client assets, and it has been processing all withdrawals and will continue to be. Zhao was urged to operate together for the ecosystem by Bankman-Fried, who claimed that FTX had $1 billion in extra capital. November 7th, CZ rejects the over-the-counter agreement with Alameda. I think we will continue in the free market, CZ responded when asked about the earlier offer Ellison had made to buy Binance FTT holdings for $22 per token on Twitter. November 8th, FTT price and cryptocurrency markets begin to deteriorate. As a result of the series of announcements, some analysts started to issue warnings on November 7th that FTT would experience a significant price drawdown. Early on November 8th, the FTT price fell by about 30% to about $15.40 from $22 in a matter of hours. Bitcoin's price began to fall as well as a result of worries that FTX would soon fail. November 8th, FTX moves to sell exchange to Binance because to a liquidity crunch. On November 8th, Bankman-Fried made the shocking declaration that FTX and Binance had reached to an agreement on a strategic transaction for the exchange to support what he called a liquidity crunch. The key justification given by FTX for asking Binance to intervene, he continued, all assets will be covered 1:1. Shortly after, Zhao said that Binance had signed a non-binding letter of intent to purchase the exchange, but added that they maintained the right to a back. November 8th to 9th, SBF takes down the "assets are fine" tweet, and FTX websites go offline. Bankman-Fried removed his inflammatory Twitter thread late on November 8th, a few hours after announcing the partnership with Binance, in which he also asserted that FTX and its assets were fine. Unconfirmed rumors that FTX's legal and compliance employees left on November 8th spread, and on November 9th, the websites for FTX Ventures and Alameda, the venture capital arm of FTX, were taken offline. On November 9th, rumors about Binance potentially wanting to break the deal started to spread. Binance formally terminates the agreement on November 9th. Binance announced on November 9th that it will not be pursuing the acquisition of FTX, less than 48 hours after Zhao first said that Binance could move to buy FTX. The exchange added that the issues are beyond our control or ability to help, citing the reported mishandling of customer funds and alleged U.S. agency investigations. Crypto market in a sea of crimson on November 9th. Investor apprehension increased in response to the news, sending the cryptocurrency market into a tailspin, with Bitcoin's price hitting a multi-year low of $15,600, Analysts predicted further decline and predicted Bitcoin would settle around the $12,000 level. SBF apparently informs investors on November 9th that he needs $8 billion. On November 9th, it was reported that Bankman-Fried had sent out an appeal to investors seeking $8 billion in emergency finance to address the liquidity bottleneck brought on by user withdrawals during the previous few days. According to reports, Bankman-Fried wanted to collect up to $4 billion from investors and cover the remaining amount with debt financing, and even his own wealth to make sure clients were satisfied. November 9th, the FTX website advises against making deposits because it cannot handle withdrawals. On November 9th, FTX's website went out for about 2 hours, and when it came back online, it strongly discouraged users from making deposits and stated that the exchange was unable to handle withdrawals. The notice was further confirmed in a post that was pinned on FTX's official Telegram channel by the channel's administrator, who stated that withdrawals of crypto and fiat were impacted and that they had no idea when it would be back online. They also stated that they have a lack of information at this point. November 10th, Sequoia Capital reduces its $214 million stake in FTX to zero. Sequoia Capital, a venture capital firm, said in a letter to its partners on November 10th that it had written down to $0 and declared a full loss on its $213.5 million investments in FTX and FTX US. The letter argued that FTX's exposure to the exchange is minimal in its Global Growth Fund 3, where its cost basis for the FTX share of the fund was $150 million, despite the fact that the crisis affecting the company has generated a solvency risk. Sam Bankman-Fried apologizes for the FTX liquidity problem on November 10th by saying, "I've twice." CEO Sam Bankman-Fried, or SBF, apologized in one of his first public statements following the influx of rumors and worries regarding FTX's insolvency in the cryptocurrency market. SBF acknowledged to investors that he could have done better in terms of being transparent about the situation with FTX in a post on Twitter on November 10th. On November 10th, the Japanese financial watchdog recommends FTX. The FSA announced on November 10th that administrative procedures had been launched against FTX Japan as a result of FTX Trading Limited's suspension of withdrawals without clearly disclosing the reasons to investors. According to the financial regulator, it had issued business improvement and suspension orders in compliance with Japanese law, including the Financial Instruments and Exchange Act and the Payment Services Act. November 10th, according to blockchain statistics, FTX may have started making withdrawals again. As of 3:50 p.m. Universal Time Coordinated, the exchange's hot wallet address has resumed activity after being offline since FTX declared on November 8th that it would be stopping all user withdrawals. According to blockchain statistics, the hot wallet, which had a balance of $469 million at the time of publication, has since been empty of numerous kinds. November 10th, Maxine Waters, citing FTX, cautions users of unregulated crypto firms of major consequences. In light of FTX's liquidity issues, the chair of the Financial Services Committee of the U.S. House of Representatives called for further federal regulation of cryptocurrency, trading platforms, and consumer protection. In a statement on November 10th, Waters pointed to FTX's problems as the most recent illustration of incidences, including the collapse of cryptocurrency enterprises and how such occurrences might have an effect on American consumers. The committee's chair pushed for legislation to create a framework for digital assets, praising her collaboration with Patrick McHenry, the ranking member of the Financial Services Committee, on a stablecoin regulation bill. El Salvador's president confirms to CZ on November 10 that his nation was not affected by the FTX problem. El Salvador's exposure to the FTX scenario was debunked by Changpeng CZ Zhao, CEO of Binance, who posted on Twitter that the amount of misinformation is ridiculous. President Bukele had informed him that, "We don't have any Bitcoin in FTX and we never had any business with them," he said, adding that he had exchanged texts with President Nayib a few moments ago. God is good. November 10, a Republican legislator alleges that Gary Gensler, the head of the SEC, worked with FTX to achieve regulatory. Emmer blasted Gensler in a tweet from November 10 for running to the media when FTX's liquidity concerns caused tremors in the crypto market. The SEC chair's alleged coordination with Bankman-Fried and FTX was being investigated, the Republican legislator claimed, but his staff merely mentioned reports that were given to his office as evidence without going into further detail. FTX US leaves the Crypto Council for Innovation on November 10. On November 10, CCI CEO Sheila Warren informed Cointelegraph that the council has accepted FTX US departure as an associate member of the organization. In order to create genuine change, Warren added, "We are dedicated to working toward creating regulation that protects users and safeguards innovation." Although the news this week has been distressing, we have also witnessed a strong sense of community. We have a historic chance to implement the best policies. November 10, FTX US announces that it might stop trading. Trading on FTX US may be halted in a few days, according to a banner at the top of the website. Users were asked to please close down any positions they might wish to close out of the exchange, but were also assured that withdrawals are and will remain open. On November 10, the Bahamian securities regulator froze FTX assets. On November 10, the Bahamas securities watchdog, the Securities Commission of the Bahamas, SCB, suspended FTX's registration in the nation and froze the assets of its local affiliate, FTX Digital Markets, FDM, and associated parties. The freeze was justified by public remarks indicating that clients' assets were managed improperly, and it was decided that putting FTX into provisional liquidation was the prudent course of action. Assets belonging to FTX cannot be moved without the written consent of the interim liquidator, who was appointed by the Bahamian Supreme Court. Conclusion. In a note to investors, J.P. Morgan analysts predicted that the unwinding of FTX will force cryptocurrency values to fall even more and trigger a new avalanche of margin calls. This would be comparable to the sell-off that occurred after the failure of Terra, a stable coin, earlier this year, when values kept falling for weeks after its demise. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.